Hi everyone, today let's talk about the jobs data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So US job growth fell well below estimates at 170,000. You can see 240,000 was the estimate. We also saw the unemployment rate jump to 3.9, pretty substantial. The expectation was to hold at 3.8, and that has been slowly rising. It was around 3.4, rose to 3.7. Now we're here at 3.9. I believe the FOMC estimate is that it will eventually get to 4.5, and it does seem like that is coming to fruition. And you can see here that big drop on job gains. Previous month was up in the 300,000s, and now we're down to 175. We'd been holding pretty steadily between 230 and 300, and now we've actually dipped pretty significantly on the job gains. Keep in mind it is still job gains, but it seems to be slowing. And on the back of this, we had treasuries falling. And really what that means is that the Fed can be a little bit softer with rates eventually. They're going to drop rates to potentially encourage the economy to grow. And you can see that chart here on the unemployment rate, 3.4 like I talked about, steadily rising here to 3.7, hovered there for a little bit, and now we're up at 3.9. So it is very slowly rising. The expectation from the Fed, like I said, is 4.5. And that seems to be where we're headed. And this should encourage the Fed to at least do one cut, maybe even two this year. Otherwise, looking at fear and greed here, you can see we're back at a 40. Really hasn't changed. Previous here was 36. You can see that dip here, and then a little bit of a rally. Got a big pop on that jobs data. We'll look at it on the charts. Back into greed on momentum. So we're headed back towards bullish. Strength still sitting in extreme fear. Breadth hovering still in fear. Put call ratio jumping into greed. You can see that contraction has moved quite quickly. Volatility neutral. That cratered. Kind of expected that based off yesterday's charts. Safe haven demand still in extreme fear. And then junk bond demand jumping back into regular greed. Moving over to seasonality, remember this is a traditionally weak period. We think we're shifted to the right, so expecting some weakness around that 8th, 9th, 10th of this month. So far, still hanging in there pretty decent. Moving over to the earnings calendar, you can see Hershey's beating on the top and bottom line. Pretty much the only thing here for today. And then looking at Monday, you have Simon Property, Microchip, Realty Income, Tyson Foods, and Berkshire Hathaway. And then looking at the rest of that economic data, you can see hourly earnings month over month, 0.2, pretty decent, a little bit lower than expectations. That is what you want to see. Participation rate stayed the same. Non-farms, like we said, came in well below estimates. Previous number was revised up just a little bit. Unemployment rate jumping to 3.9. Then you can see global services PMI. Services have continued to remain quite strong, better than expected, higher than that 50 mark. ISM non-manufacturing PMI missing on that one, well below estimates and below the 50 line. And interesting to see that missing while prices are still going higher, way higher than estimates. So still a little bit of inflation there, which is in line with the last three reads that we've seen. Moving over to Max Payne, we finished just barely above that 510 level, so that did hang in there as a pretty decent level. Finished at the top of the puts, so that is a very bullish finish. We'll see how that plays going into next week. Strong finish this week, should give us some strength early next week. Moving over to the charts, starting off with the S&Ps, you can see that massive candle that we had on the jobs data, pretty much to the high of day, right on those candles. And then we pulled back here to the middle, 508, and then we pushed right back to that trend line, and now we're above it a little bit after hours. You can see that trend here on the daily chart marks these initial tops before we had the breakdown. Hit that longer term trend line, now we're back here. Question is, what happens at this point? Are we going to break back above that? Get to a double top up around that 524 area. Momentum on this is strong. This was a strong push here today. We're up more after hours. Probably going to push at least to that 513 area in the highly traded zone, and then we'll see what happens from there. Extending these out, we're still within that bear flag type setup. If we push to that upper end of that trend, that would be around 515, so it would give you a couple more points of upside. And everything here still looks bullish going into the Monday. Moving over to the Tasty charts, you can see that daily ATR stop is going to be at that 517.97 area. I think that's probably where we're headed. That's a little bit above the trend line as well, so keep that in mind. 517.97, basically 518. That would be right in the middle of this previous range. If you topped out here, that would be a lower high, and then you would expect to break down to that 144 EMA, which is currently sitting at 485.50. Moving over to the NASDAQ, very similar thesis. Big push here. Topped out on that second candle, pulled back all the way to the next level, 433.24, held that level on the test, and then rallied up through the highly traded zone here. And then you can see that highly traded zone on the daily chart right at the next level at that 438 area. Momentum and RSI bullish. Everything still looks good here going into the Monday. 438 would be your next price target. Moving over to the Russell and the Dow, similar thesis here, about 1% higher, got to that next level, 201.88. It's holding that level. It's up a little bit after hours. It's above the 55 EMA in that zone as well. Overall, still looks very good coming off of this previous bottom. And then looking at the Dow, clear double bottom, slightly higher low, and then pushing to that 55 EMA at 387.44. We talked about that level yesterday, and the level here, 387.77. Touched that level, bounced off it a little bit, but everything still looks bullish on both of these. Moving over to the MAG7, you can see this jumped pretty strongly off of that Apple move, gapped higher and rallied 2.6% to the upside, looking to push to that 367.10 level. That was the all-time high here for the MAG7. Momentum and RSI are bullish. Moving over to Apple and Tesla, you can see that huge jump on Apple, went all the way to that 186.81 level and then pulled back almost to the 182.37 level. Massive gap higher, finished just short of 6%. It's above all the EMAs and SMAs now. You can see pretty clear consolidation. You kind of expected that it might be breaking higher. We had a potential breakdown and then it went right back into the range. So there were clearly buyers in this zone and then massive volume on this push. We'll see how it plays out from here. And then looking at Tesla, basically unchanged, 0.63. Still holding that trend line, still holding above all the short-term EMAs. I think this is probably going to turn higher, but it hasn't really started yet. Moving over to Microsoft and Amazon, you can see Microsoft gapping higher here today as well, 2.25% to the upside, momentum rolling to bullish. And then Amazon basically at its all-time high, another gap higher, 0.82 to the upside, also bullish on both RSI and the MACD. Next level here, 188.61, and for Microsoft, you have 413.36. Moving over to staples and discretionaries, staples going higher, 0.3. Tested that level again, 75.40, so that is a strong level, very important. Touching that level, rallying again, momentum back to bullish, RSI still bullish. And right now this still seems like a bullish structure to me. It looked like a double top here and it looks like we were rolling down, but then we held this 21 EMA, held VWAP in there, and now this looks strong. And your next level here would be 77.50, and comparing that to discretionaries, which was up 0.67 here today, gapped higher and fell. Could not get above that intermediate level that I have here at 178.39. Almost tested 180.10, still at a lower high. Doesn't look as strong as staples in my opinion. Moving over to the dollar on the hourly and the daily. This continued to fall here today. Big wick lower, retesting that trend line, probably going to fail here. Almost hit the 55 on the daily chart. We talked about this being a bull flag setup, failed breakout, expecting this to break down, and sure enough it did. Momentum and RSI are both bearish. I think this is an initial test, and I do think this is probably going to go lower, at least for another day or two. Moving over to yields, like we talked about with the FOMC and the jobs data, yields were falling on this announcement. We heard the FOMC talk about that dual mandate of full employment and inflation control and price stability. And now price stability is not super great right now, but with jobs data starting to go a little bit higher on the unemployment rate, we're seeing yields taper off. Definitely not going to get another hike, in my opinion, but the question is, when are we going to see cuts? And it seems like the market thinks they're going to come a little bit sooner now after this unemployment data. Moving over to bonds, as you would expect, both of these went higher. Makes sense. J&K gapping higher and rallying, 0.46. We're back into the middle of this range that we've been in for a long time. Had a breakdown here, and now we're back into it. We'll see what happens. And then TLT coming off a base, gap higher. We're above the 21 and VWAP. Looks like this might be finding a little bit of legs here with that breakdown that we're seeing in yields. Let's put a price target in here around $92. See if we can get up to that 55 EMA. And then moving over to volatility, as you would expect, volatility is dropping out of the markets aggressively. Pretty much all of the big jobs, pretty much all of the big data for this period, to include earnings, FOMC, jobs data, inflation data, all of that stuff is in now. So we're seeing volatility kind of drop out of the markets. Markets have the data, we're pricing it in, and volatility is headed towards that 12.75 area in my opinion. Moving over to my accounts, I did fine, not as well as I could have. Made some money in my IRA, should have made more there. And then looking at my Q's account, did okay there as well, a couple $100. Again, not terrible. And I think this is an all-time high here for my accounts as well, so that's good. And then looking at my positions, pretty aggressive. 202 put here for Monday on the IWM. That was in the money at the close. Now it's a little bit out of the money with the IWM going up a little bit after hours. Same here with the Qs, rolled up to 436 for $1.50 credit. That was in the money at the close, and now that's out of the money as well. And now that's almost out of the money just by a few pennies here after hours. And then I do have a 438 call on here for Tuesday for $1 So if these puts get assigned on Monday, then I'll have that covered call already set up. And that's why I'm a little bit more aggressive on the put side. I do have those calls on. I think there's a small possibility that we get a slight pullback on markets, but I would expect it to be bought up based on everything we're seeing on the charts. So overall, quite bullish going into Monday. Let me know down in the comments section what you think of the jobs data and when we're going to get a cut from the Fed. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.